But Rahul Jain, the Vice President at Dolat Capital, also joins us on the show right now. Rahul, hi, good morning. Thanks so much for making time. Well, the stock markets are jittery and nervous around this kind of venture that the PB Fintech founders and promoters are looking at. What's been your take?
Yeah, I think some of these initiatives are generally taken with the view that you want to create a certain kind of an ecosystem, but ecosystem take its own time to flourish. So you move towards that direction to ensure things happen eventually towards what you want to do. So classic example is if you start with digital distribution, then you don't see a lot of people coming digital, then you create a call center like what they have done in the insurance side of the business, and then you created an offline center because people still want more personal touch, in-person visit and stuff like that. So I think taking the healthcare example forward in terms of given the low penetration in the insurance space, maybe this is an effort to create awareness and create the comfort in terms of the mind of consumer that this healthcare insurance things work. I think the effort is in the right direction, but it's a massive task given the scale and the diversity that we have in terms of consumer. So we need to explore. We need to understand what's the precise amount of money that would go into this kind of a venture, and what could be the impact of such an effort to understand the real picture out here.
Just curious to understand that, do you think that, Rahul, this is going to be that meaningful shift from the capital light business model, and how do you see it panning out for PB Fintech?
Yeah, so as I was referring to the previous example as well, the business was just a portal, and from portal to call center and call center to offline store. So you want to create a very asset-light business, but if the demand is taking its own time to evolve to a new way of doing things, you need to address the gap, and that is what the effort is. Whether, as we don't know the precise amount of quantum that they would like to deploy here, it would be difficult whether that investment is really meaningful in their context. One thing is clear that their cash requirement in the current business has reduced meaningfully. The cash burn is almost near zero, and they have a large cash, and they expect to turn meaningfully profitable next year. So they have money to deploy it. They have not talked about their capital return policy as of now. So it seems that they are thinking about this capital to go in some form, and this could be a small experiment to start with, and may scale it up if it works on the pilot side.
From asset light going to asset heavy, and definitely there'll be a dilution of ROCs. We don't know the amount yet, but definite dilution. But the question to you, Rahul, is what does one do after the 13-14% dip that we have seen over the last couple of days? Does it become a buy, because at least the inherited business has been doing okay? And also, what's your take about the multiples and the factors going forward? Do you think this could be a derating event at all?
Yeah, valuation, as you see, at different facet of the market are already overstretched. If you just go by the aspiration, what the management has laid down for their own profit is 1,000 crore in FY27. If you look at the current market cap or enterprise value, it's upwards of 75-80 times, or even on FY27 number. And of course, it's still a long haul because the current profits are, close to 100 crore odd run rate. So I think the valuations were already overstretched, and any such effort only makes it difficult for people to play into it. So we currently have, a view which is negative given the high valuation. So this only adds up to the problem.
Because the valuations had run up and this adds to the problem. But what do you mind, Rahul, was the reason for the promoters to think of this step in the first place? Was it that entire Bima Sugam and that entire space was going to get competitive and the company was going to lose the edge? Was it in terms of the growth that they were lacking, or it was purely on account of that backward integration and the consumer confidence that you talked about?
Yeah, I think the effort is here to continue to dominate the digital distribution of the insurance business, and healthcare, health being an important product which needs a much deeper penetration. And to resolve that, you need to solve all part of it, right from reinsurance to insurance to claim management and stuff like that. And we know that there's a low trust that we see in the insurance segment, that there is always risk. People perceive that if they claim, whether they will get the right claim or not, or the insurance company always look at very suspiciously on the claim made by the consumer and the hospital, whether the sanity of it. So it's not as smooth as it happens in some of the Western markets. So I think there is a need to make it more simpler, transparent, faster to drive the confidence. But this is a big task, and PB Fintech can only do a small pilot in a market around it, because to do it on a pan-India level, to clear the perception around health insurance and its claim, I think that's a tall ask.
Okay, appreciate your time, Rahul. Thanks so much for giving us your thoughts. This is certainly going to be a newsmaker, and we'll be watching out for the stock in today's trade.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.